Hey everyone, how you doing? This is going to be our video for chapter 22 help, homework help. Chapter 22 help. Let me help chapter 22. Go ahead and pull this screen out of the way. I don't know if you guys can even see it. Probably not actually, I think about it, but it's very annoying in front of me. So this is going over budgets for the company. So we're going to a formal statement of company's plans in dollars is a what? What? Guys, we're in budgets. We're in budgets. I'm going to give you that one for free. Look at that. If you don't know budgets, guys, that's what we're doing. See, chapter 11, we're still in 12. Oh, look at that. I'm giving you lots of multiple choice in this one. All right, here we go. We're preparing a production budget for the third quarter. Hint, desired ending inventory units are given. Sweet. Okay, so if you hopefully you watched the video. If you didn't, go back and watch it because if you come to me and ask for help on this because you don't know how to do it, I'm just gonna tell you go watch the video, okay? Because we went over these pretty in detail. Production budget. We're looking for production budget, but we're looking for it in units. Black Diamond Company produces snowboards. All right, this is better than those hockey sticks from the video from the lecture. Each snowboard requires 4 pounds of carbon fiber, but are we looking for that? No, we're looking for total number of units, okay? So we're going to go budgeted sales in units, and we're going to add to it our desired ending inventory in units. And then we're going to subtract out our beginning inventory in units, okay? That's how we're going to do this, production budget in units. So we're looking for budgeted sales. We don't care about how much. We have 6,600 snowboards. So that's our beginning inventory. Okay. We don't care about the carbon fiber pounds. 166,000 snowboards are budgeted to be sold during the third quarter. That's a lot. 6,000. Better than the hockey people. Management wants to end the third quarter with 5,100 snowboards. We must not expect. Oh, this is for a whole quarter. Never mind. So we need total required units of that. I'm going to pull up my handy dandy calculator. See, all this other stuff, it's probably going to be, it looks like we're not linked though. I don't know. We're just doing the math here. We're taking our budgeted sales, adding what we want in ending inventory and subtract, and that's our total needed units. Subtract out what we already have. We need 164,500. Ooh, yeah. Yay. Okay. That's all we're doing. Production budget and units. This is one of the easier budgets. It's when we get into the raw materials, direct labor, factory overhead. That's when it gets a little more involved. But that's what we're doing. Oh, look, direct materials budget. Oh, see, that was part one of four. That's the little clue. So units to produce, we just calculated that, didn't we? We need to produce 164,500. All right. So we need that many units. So now we need to know um, materials required per units in pounds. Management reports requires 4 pounds of carbon fiber. So we're going 4 pounds. We're going to take 164,500, multiply that by 4. So we're going to need 658,000 pounds. Okay? What we're going to do now, that's what we need to produce. That's the total pounds. We're going to need to subtract out, or to add, excuse me, our desired ending materials, or ending materials inventory. So let's find out what that is. Oh, management wants to end the third quarter with 5,100 snowboards and 5,600 pounds of carbon fiber. So we're going to go here, 5,600 pounds of carbon fiber. There we go. And look how it's putting this pounds here for you. That's nice of them. Okay. Carbon fiber costs $15 per pound. Okay, so what do we have to subtract out though? Our beginning materials inventory. What do we have there? We had 7,600. So we're going to take our 663, 600 and subtract out the 7,600. 656,000 pounds. Dang it. My brain is funny. I'll say it and then I'll forget it. 656. Okay. And then we're going to say $10 a pound. So we're going to need, that's a lot of money. Money, money, money. Materials cost per pound. I just verify it was $10. $15 per pound, even better. Okay, let's check our work. Yay! Okay, so we're done with this one. Let's go to the next one. What's this one going to do to us? For the direct labor budget, units to produce, we're going to go back again to our prior budget so we can get it right. 164,500. 164,500. 164,500. And units to produce is what we got there. We're going to go to direct labor hours required per unit. Requires 0.4 hours of direct labor. So what do we need for direct labor hours? 164,500 times 0.4, 65,800 hours. What is the cost per direct labor hour? I think that was $20. Oh, no, $20 per hour. That's what we need for our direct labor costs. Look at that. And the last part, factory overhead budget for the third quarter. Direct labor hours needed. We just calculated that here. 65,800. And then our rate is $10 per direct labor hour. Our budgeted overhead variable, I can do that in my head. That's 658,000. And then we're going to have our fixed overhead, 1.798 million. 1,798,3. Total budgeted factory overhead is going to be 1,798. 2,456. There we go. Let's check our work. There we go. Okay. Took our direct labor hours we needed, multiplied by our rate to get our variable budget overhead. Took our fixed budget, which was given, added them together. Real easy. Okay. Look at number 19 here. Oh, we're going to have some fun with this guy. We are going to do a schedule of cash receipts from sales. Prepare a schedule of cash receipts for the months of July, August, and September. Okay. So cash receipts from, let's actually look at this. July, August, September. Sales to customers are 25% cash, 75% on credit. Sales in June were there. All credit sales are collected in the month following the sale. June 30th balance sheet includes 17,000 in cash and 5,100 in loans payable. Yada yada. Looks like we're tied to 20, so we're going to carry this stuff over. So that's probably all we need for this. So we're going to say cash sales, and then this one's going to be collections from prior period sales. It says 25% of it is cash sales. So our sales are listed there. July is going to be 25%, 15,875. Let's do 79,500, 19,875, and then 48,500, 12,125. Let's make sure I did that right. 48,500, yeah, 12,125. Okay, so now we're going to do collections from the prior sales. And that was, I believe, what was it? 75%. So we're going to take June's amount of 63,500 times 0.75 for 75%. August is going to be 47,625. And September is going to be 79,500 from August times 0.75. 59,625. And we need to come up and find out what June's was, 57,000 times 0.75, 42,750. Okay, there is our sales budget. Excuse me, our cash receipts from sales budget. Then the last one I'm guessing is a cash budget. I'm guessing because I did it. I put it in here. So beginning cash budget or balance, excuse me. It said over here, June 30th balances included 117,000 in cash. They have a loan down here. Activity, additional loan. Loan balance, there we go. 5,100. Okay. Minimum cash balance 17,000. Required loans are obtained at the end of the month. Cash balance interest is 1% per month. So 5,100. That's $51 for interest. We'll do that in a minute. Rent. Now, oh, and here's, I'm sorry. Okay. Here's this information. I was like, wait a minute, I don't have this other stuff. And what we should do is start with direct materials. Let's go ahead and redo this. Sales, commissions, office, salaries, and rent. Here will be interest on loan. And then we'll select direct materials, direct labor, and this will be overhead, whatever it's called. Okay, there we go. That's better. Direct materials, 16,260. You know what I'm going to do? I'm going to snip this. Remember you hit the Windows key, Shift, and S for the snip tool. My snip tool is now on, and I'm going to just snip this. I'm going to open up my Paint program. That way I can see, and I'm not going to put it on the screen. I'm just going to know that I'm pulling it from that information. Direct materials was 16,260, 13,540, 13,860. 4,140, 3,460, 3,540, 2,300, 16,900, 17,300. All right, so I just pulled all that information from here. Budgeted sales, we got the money up there, so we're going to go up here and say budgeted sales. Add cash receipts. Oh, we calculated that on the prior page. Let's go over here. And I'm going to snip this and do the same thing. And then go back. That way I don't have to come back here again. So from that, I pull cash receipts of 58,625, 67,500, and 71,750. Okay, we won't know these beginning cash balances until we calculate the ending cash balances here. Interest is 1%, so we can do that now. 51, that's $51 for interest. Okay, so I'm sorry, I'm kind of bouncing around a bit here just because I know what I'm looking for. Now we're looking for sales commissions. It's 10% of sales. So we're going to take 10% of all of our sales. Sales commissions here then is 58, 62, 50, 67, 50, and 7175. I'm taking 10% of these numbers, okay? If you take 10% of it, you just move the decimal over 1, and that gives you 10%. Office salaries is $4,100 per month. And then rent is $6,600 per month. Okay. So let's do our preliminary cash balances. We got 75,625 minus 57,314. That gives us 18,311. So in this case, we're above our preliminary amount of 17,000, which is what we need. We come up here, we need to have a 17,000 is what we need. So we're going to be able to repay our loan by 1,311. I'm taking this number, I'm subtracting out 17,000 to get that. 1,311. So our loan balance now is 3,789. And what that's going to do is give us $17,000 up here. And now, because we've already done this, all we got to do is our interest on the loan. And that's going to be $38, rounding that up. Our preliminary cash balance here is going to be 84,500 minus 51,388, 33,112. So we're definitely above our balance there. So it looks like we're going to be able to pay off our full amount of 3,789. We're still well above our required ending amount. And then our ending balance here is 29,323. So we're going to take 101,073 minus 52,575 for 48,498. And if the book gets mad at you or not, you just put a 0 there. I don't know. That may be some way that you are not finished. If you've done everything else, just throw a 0 there because you don't have any loan interest there. We're not having any additional loan. We're not having a repayment of this loan. I'm going to put a 0 there to reflect that. And we're all done over here. Let's check our work and see if it likes it. Whoa. What happened on our sales commission? Didn't it say 10% of sales? I took it on 10% of cash receipts, not sales. Oh my goodness. I did it wrong. See? 10% of sales. I got to go back. Yeah, I did. It needs to be 63.50 here. That was my fault. Oh my goodness. 79.50. And then 4,850. Man. All right, let's reevaluate here. How is this still the same? Oh, preliminary cash balance needs to be recalculated. That's right. Okay. So we're going to take our 75,625 minus 57,801. That gives us 17,824. So we're only going to pay off 824. So now our interest here is going to be $59. No. Oh, a negative there. $43. And then we need to do another preliminary balance. Sorry, see, this is what happens when you do something wrong. 31,907. And then we're going to repay all of this back. $4,276. All right, so now we got 27,631. Oh, forgot to recalculate that one. 99,381 minus 48, 4, oops, 5250. 49,131. That's better. Okay, sorry for that mess up. But see, even I can get, if I'm doing it fast, it's hard to talk through it while you're doing it. Sometimes you just miss it. Yeah, don't take the cash receipts. That's not the sales. That was the sales. Okay. So anyway, that's your help for chapter 20. I hope you guys enjoyed it. I love those budgets. It's so much fun. But if you have any questions, please let me know. Otherwise, you guys have a good one. We'll see you guys in the next chapters.